Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. And here to take us through the trades, we've got Don Kaufman, co-founder of TLT. It is great to see both of you, Don. Always love getting your perspective. Why don't we start out with your big picture take on the market today, especially given that we've got this news about the Treasury Secretary headed to Switzerland to kick off some negotiations with China. And then we've got the Fed in front of us. What are your views?
Yeah, the negotiations, well, I wouldn't expect anything necessarily in the near term. The headline risk, though, right now to the marketplace, it's massive. I mean, this marketplace for me has become much more about taking kind of structured shots, which you're going to see in my my trades here momentarily, than necessarily just being outright long the market or short the marketplace, because we are literally headline driven. But today is you're going to see a trade here in a moment. This is what I would term adopt a dove day, as Jerome Powell is likely to pivot, in my opinion, to a little bit more of a dovish stance.
Interesting. Adopt a dove day. All right. So then let's talk about your first trade. You've got Nike on your list. What are your views on this?
Yeah, this is one where I'm actually looking for a bit of a bullish turnaround, basically on some of the news that we expect and headlines that'll be breaking, of course, regarding tariff negotiations. So in Nike, I think we found a bit of a base of support in or around this 55 level, and have Rick look at this in just a moment. I'm going all the way out to the July 18th expiration. As I said a moment ago, like, I want to take structured shots. This one is going to be bullish. July 18th expiration. I'm going to be buying the 65 calls. I'm going to be selling the 70 calls. The trade is just a $5 wide spread done for a 90-cent debit. It's a inexpensive shot to the upside, given the fact that Nike finds this base of support, could actually rip a nice trade into midsummer.
Okay, all right, and then Rick. So look, Nike has certainly faced some headwinds year to date. Obviously, there are some investors who are believing in the new CEO. Take us through what the chart looks like.
Yes, and to Don's point, it does seem like perhaps you could make the argument that we have formed a bottom in this name. What I mean by that is that Nike repeatedly bottomed out several times on our chart at the level around 52, 53 or so. You can see now, though, that price has pushed beyond a short-term downward sloping trend line. RSI is on the move to the upside after experiencing a slight bit of bullish divergence, and it's approaching that 50 midline that would give us another bullish signal if it were to switch and cross above the midline. Today, though, price is at the 21-day exponential moving average, our solid yellow line on our chart there. And if we were to push above those recent highs near 59.50, the next stop would be right around where Don is identifying, 65 or so. 64.16 is where the gap was formed. So gaps often look to be filled in trading. Certainly doesn't happen every single time, but it's a notable area that would stick out to probably many technical-minded traders here. If we were to push beyond that, then eventually there's another gap around the 72 level. That could be another area to watch, Diane.
All right. And then, Don, I'm going to send it back to you. I want to get your final thoughts on Nike before we move on to your next trade.
Yeah, Nike, this one literally is not so much about the CEO in my mind. It is much more about tariffs and negotiations, but there's going to be some ups and some downs along the way. Again, as I said, I don't think this is going to be a fast negotiation, but I do believe it's worth, if you will, the shot to the upside in Nike.
Okay, so let's talk a little bit about the next one that's on your list. You've got Caterpillar on your list. Tell us your thesis here.
You know, the first thing I'll say about Caterpillar is, wow, some of the volatility in here. You know, this is not something you would normally anticipate out of Caterpillar. I mean, this is the stock that's recently gone from 400. It's actually sold off to 260. It bounced to 320, but it's still effectively in a downtrend in the near term. And I'm actually going to trade it for exactly that. So this is on the opposing side of the spectrum. I'm actually going to take a bit of a bearish shot here in Caterpillar. Again, the July 18th expiration. I'm going to be buying a 310 put and selling a 300 put. It's done for a $2.75 debit. It's a $10 wide spread. But look, we have recently, I mean very recently, traded well under the 300 level. So this is definitely not out of the realm of possibilities. But as I said, it's a very structured, a very definitive shot, if you will, on some out-of-the-money options to the downside.
Okay, so not out of the realm of possibility, but Rick, what do you see though when you look at the chart?
Caterpillar's been stuck for a few days. The past few sessions kind of blocked at our red line on our chart, which represents a key area, a repeated series of lows that price stopped at near about 325. You can see that also lines up with our orange 63-day exponential moving average. So this gives us a pretty convenient confluence of indicators to keep an eye on here. You can see that just recently as well, that was where the downfall began from the tariff-related news inflow here. We can see, though, that if we were to kind of talk a little bit more closely, 311, pretty close to Don's strike price. That's our yellow 21-day exponential moving average. That would, if a bit above that as well, be the level of our trend line too. So that would be kind of the point where traders might be looking for a break to the downside. Then the next potential support area is that green line, 307. That marks a notable low, August 5th, from which seemed like an exceptional low at the time for many stocks, and it was handily taken out by the tariff news stuff. But 307, that would be another downside supportive area to watch if things start to go south.
Okay, 307, downside supportive area to watch. Don, final thoughts on Caterpillar before we move on to your final trade.
Yeah, once again, this one is, to me, it's somewhat less about Caterpillar. I think the S&P 500 is going to have a lot to do with this. So if we start seeing more sell-side activity to the broader marketplace, obviously Caterpillar is going to be accentuating some of those moves. But again, the volatility inside of Caterpillar, I mean, there's a lot of underlyings you would think of as volatile. This one, though, is just striking in some of the most recent moves. And again, well situated here to what I said is in a downtrend. And again, under the 300 level seems very viable.
Okay, and Don, let's talk about your final trade. You've got TLT on your list. That's that Treasury bond, the 20-year Treasury bond ETF. How much of this hinges on today's Fed moves?
100% of it. 100%. This is taking a shot in and around the Fed announcement. I mean, that's the intent of this next trade here on the TLT. So this is obviously the 20-year, the TLT ETF, and this is again what I termed Adopt a Dove Day. So we're all well aware of some of the political situation right now involving Jerome Powell, and at this point, you could look at like the PCE data and say like, oh, he can't cut rates. You could look at GDP and say, I can't make an argument, or jobs report, I can't make an argument for it. But I got to tell you, the uncertainty in tariffs alone is enough to make an argument, okay, for literally cuts to be coming. He's not going to cut today, but again, turning a little bit more dovish or changing some of that rhetoric is probably in those cards. So this trade is just buying a call. Why? You want to buy a call because you think interest rates might go back down. So I'm just going to go out and buy a May 9th call. Now, if you look at a calendar, that's just 2 days away. It's a Friday expiration. Just going to be buying the 87.50 call for around a 70-cent debit. So just taking a shot, if you will, to the upside on the idea that Jerome Powell goes double down Dove.
Okay, that's the goal there, I suppose, with this trade, double down Dove. All right, Rick, take us through what the chart looks like for TLT.
Downtrending off of the highs near 101.64, and recently we saw a bit of a false breakout above that trend line there that gave us a gap level to keep an eye on. 92.82 is the low point before we had our big gap down that brought us below our purple 252-day exponential moving average. Notice that during these low points, especially when we bottomed out near that 85 level, that green dashed line there was very heavy volume. You can see the volume spikes on our lower part of our chart there. Volume at least 50% above the 50-day simple moving average of volume here. But for now, price below our moving averages, below our trend line here, not making new lows, and the level that Don picked, that's pretty close once again to our yellow 21-day EMA. So that's a shorter term, important technical indicator. Many people follow it. If we were to get some sort of push, the trend line that we're seeing here that lines up with another moving average, the 63-day EMA, that would be the next stop. So 89, those are some notable upside levels. And like I said, the green line near 85, double bottom, that's a key one to watch as well.
All right, Don, I'll yield the floor back to you. Any final thoughts on TLT, Caterpillar, or Nike?
Yeah, the overall marketplace, one thing I would say is volatility is still far from dead. And I've been reiterating this week in, and week out right here on Schwab TV is we're still in a volatility backwardation. Do not forget that. It looks quiet. It feels quiet. There's still instability. There's still low liquidity. And overall, that backwardation still screams duck and cover.
All right. That's Don Kaufman, Theo Trade, and our very own Rick Ducat, lead market technician here on Schwab Network. Thank you both.